Joe Vitale here, Vitale Wealth Management with the Gradient Investments Weekly Market Update. All information is gathered as of April 1st, 2025. Let's get into the market and review. Major U.S. indices ended last week in the red with the S&P dropping 1.52, NASDAQ about 2.59, and the Dow losing 0.96. Now value stocks, which is the Russell 1000 value, once again outperformed growth. Versus the Russell 1000 growth, declining 0.45 versus almost 3%. Gold stood out as the winner with the precious metals surging to records high, closing at $3,072 an ounce. As of today, Wednesday, it's over $3,100, so gold is really high right now, and we'll see how much more where that's going to go. After a brief rebound on Monday and Tuesday, major U.S. indices turned negative for the remainder of the week. The S&P 500 now posted losses for 5 of the past 6 weeks. As the first quarter of 2025 comes to a close, tariff uncertainty and inflation concerns continue to dominate the markets, which we're going to have a report at 4 o'clock today on the implementation of the tariffs. So we'll see how that goes. On Friday, the PCE report, Fed's preferred inflation gauge, came in hotter than expected. The core PCE, which excludes volatile food and energy prices, rose to an annual rate of 2.8% in February, moving further from the Fed's 2% target. In addition, U.S. consumer sentiment hit its lowest level since November of 2022. So yes, there's a lot of uncertainty. I know everybody's talking about the tariffs. We're going to talk about that in a little bit as well, and that's of course creating a lot of market turmoil, a lot of concern. Upcoming economic release, this week's focus on the labor market with key economic reports set to provide fresh insights into the job trends. The JOLTS report scheduled for release on Tuesday, which was yesterday, will offer more information on job openings and labor demand. While Friday's April 4th jobs report will reveal the latest data on the unemployment rate and job growth for March. So we really didn't see a big effect on the market yesterday, so nothing there. Market outlook, investors face a busy week ahead with a focus on trade policy and jobs data. On Wednesday, the president's expected to announce the plans for the introduction of reciprocal tariffs on key trading partners following last week's announcement of a 25% tariff on all non-US made cars. And when we talk about reciprocal, I don't know a lot of people know, but we're paying a 200% tariff to some countries for our goods and services. And basically all the money that we're paying to other countries, we're just saying, hey, let's be fair about that. That's what so far we're hearing. In addition, investors will receive further insights into the healthy economy and labor market with key job reports set to be released throughout the week. Friday's unemployment report will indicate whether February's hotter than expected reading persisted into March and if the recent slowdown in job growth continued. Now, despite ongoing uncertainties, some assets continue to shine. Our gold extended its winning streak for 4 weeks, now up 17.3% year to date. Meanwhile, international developed markets have gained 9.1% year to date, while emerging markets are up 4.7%. For the most part, the S&P and everything is down roughly about 10%, just over 10% for the NASDAQ, the S&P, and the Dow. We're seeing 10% plus drops on that. As far as the gradient investment portfolios last week, no real changes in those at all. They do rebalance, of course, as needed. Stocks in the news, Lululemon, which is owned in the G33, shares of the athleisure retailer fell more than 11% after the company reported earnings alongside weaker than expected guidance for 2025. Nvidia, owned in the Core Select and G33, the chip maker, dropped 9.67% last week amid ongoing tariff uncertainty. Many of its chips are used in data centers, which often include equipment imported from Mexico, among other regions. And that's kind of the thing. When you look at the S&P and our Core Select portfolio, the Magnificent Seven that have been running that. Well, now we're getting a little bit of a pullback there. So, of course, now here's the other thing too. We talk about this, the market can be great. The market can be scary. What is it? It's basically kind of a roller coaster, right? It goes up and down, up and down. How do you get hurt? You get hurt if you get off. If you get off, you try to get out too soon, try to get in, try to time it. That's why we allocate the way we do. You've got safe money, you've got income coming in. If everything's good, we've got money, we can peel off dividends, but we never want to lose our cool and say, oh my gosh, emotions are taking over, we got to get out. You have to remember, you own our portfolios, 50, 80, 100 growth, blue chip stocks, big companies. They're not going anywhere. So we're going to have a little earnings pullback. So uncertainty is going to happen. We've seen what happened last time. We saw what happened. We got a 10 to 15% pullback, but the next year it went up 30-40%. So what does that mean? Stay the course, keep calm, we're going to be okay. But if you need to get a hold of us, give us a call at 855-756-5700. Visit us at vitalewealth.com. God bless you. We'll see you again next week.